Greg Andrick here, bringing you another Business Freedom Conversation post. So there's a State of the Union tonight, and the Wall Street Journal's reporting how Biden, because he's behind in all the polls, is going to differentiate his platform. And you tell me how this platform affects you and you think it's going to affect the economy. So what Biden is doing to differentiate himself from the other candidate, you all know who that is, he is proposing to do massive tax increases. And one of the things that's going to make this likely is Joe Manchin of West Virginia and Kristen Sinema of Arizona, who was a Democrat, is now an independent. Both are not running. Both of those senators are the ones that prevented the loss of the filibuster. What's the filibuster? It means a Republican or somebody from the other side, a Democrat, can get on a podium and keep a bill from advancing by continuing to talk. What does that cause? Under the current rules, it means 60 people. And under our current, 60 senators, that is, under our current rules, that means that you have to have some form of compromise. If you're a Democrat, you got to find 9 Republicans. If you're a Republican, you got to find 50 Democrats, okay? Because they all seem to vote in the block. Really, not to find 50, got to find 10. So look at where we are. And if you lose the filibuster, that means one party rule. If you have one vote more, that's what we have going on right now. The Democrats can with 51 votes, if they get 2 senators, and the guy running in Arizona, Moreno, says he wants to get rid of the filibuster. So if the Democrats pick up 51 senators, they will get rid of, there will be no compromise. It will be whatever their agenda is. So take a look at the things that Biden is talking about doing. He wants to move this very complicated corporate minimum tax. I'm sure all of you personally know about the alternative minimum tax. It's basically meant for the government to give you deductions and then take them away on the back end. So what Biden got through, but nobody knows really how to effectively implement it, because for us right now, it's only on corporations that have $1 billion or more of income. And Biden's like, well, we don't care what's on your tax return. We don't care that you've paid all the taxes according to all the rules. We want you to pay 15% of your book income. But then it gets really complicated. Well, how do you actually implement that? And since all these large corporations that have more than $1 billion of income are all over the world, how do you consolidate these entities that are in sovereign other nations that are legal entities in another country? So it's really complicated. Well, he wants to have a massive increase up to 21%. So the next thing that he wants to do is he wants to raise the overall corporate tax rate from 21 to 28%. So I want to remind you that China's corporate tax rate is 25%, and all investment around the world is based on net after-tax return. And what has caused the flow of manufacturing and other goods back to the United States is the fact that we have a lower tax rate than China. If you bump it up above China, then what happens is you're going to have people want to invest more in China and have their production in China where it's taxed less. And, maybe that lends credence to these Chinese people giving the Biden family millions and millions of dollars, and we can't figure out exactly what did they do for that millions of dollars. Well, this may be it right here, that if they're able to get this through, it'll shift the economy back to China, and you'll have this whooshing sound again of everything leaving the United States, because a business measures the success by how much money's left in its pocket, and if you pay less taxes, you got more money in your pocket. So the next thing is, remember the 20% small business deduction? Well, that's one that affects most of you out there. That's gone at 12/31/24. And if you have 51 Democrats that believe the filibuster should be gone, you're going to lose. You're going to have 20% more income and pay a lot more tax on that income, probably 28% or more. So it's going to be a huge increase. The next one is, this goes directly to the idea that they hate business, or they really hate big businessmen. It's okay for bureaucrats to fly around on government jets at taxpayer expense, but if you own a corporate jet, they want to tax the fuel so you won't use it. They dislike the fact that you have something as good as they have. Well, no Gulfstream is as good as a 747 or some other big Boeing plane that, Nancy Pelosi used to fly around, I think, on a 787, but Boeing 787. But anyhow, they want a corporate, and that's really just a nasty thing that they're going to want to go to our big corporations. Screw you. You need to fly commercial. only we bureaucrats get to fly around on planes at taxpayer expense. Then the last one is they have a stock buyback. They hate stock buybacks. And there's already a 1% stock buyback tax on the books. They want to bump that to 4%. So there you have it. And the other thing that's critical is all those other deductions, Section 179 depreciation, all this sort of stuff sets to expire on 12/31 and probably will not be renewed rather. So that means for small business, you're looking at a massive tax increase if the election turns the way of Mr. Biden. And I think you need to start preparing for it. And on top of that, you have this new thing, Corporate Transparency Act, the beneficial ownership interest. That's just the tip of the iceberg. As I've said in my previous post, the beneficial ownership interest isn't about money launderers, drug dealers, and oligarchs. It's about you and what entities you have and what money they receive. And the next step is to get payment processors to issue 1099s that aggregate payments to entities. It's a new form of 1099. The Republicans have kept them from getting this for years. What does that mean to you, the small business owner? That means they're going to know how much money all your entities received, and they're going to be able to calculate what they think you should have as income tax. And let me tell you another thing that's coming down the road that's going to be shocking, because we already pay taxes on intangible gains or unrealized gains. That's property tax. You own a house, you're getting a tax. It's been legal for years. There's a case going up to the Supreme Court where on income tax, not property tax, but on income tax, we've had a long term of, since like 1910, of the Supreme Court ruling you can only tax income based on transactions. Well, there's a case percolating the Supreme Court that Trump tax law from 2018 allowed the tax of unrealized gains in foreign entities. And that is coming up to the Supreme Court. And if it wins, this is where this corporate minimum tax, this is where these other items come in, where they want to know what cash you've received or what payments you've received, because they will be able to calculate what they think your book income is in taxes. So let me know what you think in a comment about this pending tsunami of taxes that's coming your way. This is Greg Andrick, Business Freedom Conversation Post. I'm going to catch you on the next one.